Welcome, everyone. Thank you for joining today's webinar, where we're going to be talking about how you grow your self-directed IRA with asset-based lending. I'm Reneika Lightbourne with Advanta IRA. I'm really delighted to have a very special guest, Mr. Gary Berson of the Berson Group. Hi, Gary. How are you?
I'm doing great, Reneika. Thank you.
Thank you as well. So Gary's going to share his expertise on asset-based lending to residential builders for acquisition, remodels, and new construction. But before I turn it over, I just want to give you an overview of what self-directed IRAs are and, of course, how it works. If you have questions, just feel free to go ahead and type those in the question box. We will allocate time at the very end to get those answered for you. And with that, we'll get started. Again, my name is Reneika Lightbourne. I'm a business development professional here at Advanta. I've been with Advanta as an employee since 2019, but I'm also a client of Advanta prior to joining. So self-directing is something that I personally and actively do as well. For you as a listener, if you have specific questions, you want to talk through your scenario, do a deeper dive, you're more than welcome to give me a call, send me an email, but also too, I would encourage you to visit our website, advantaira.com. It's a great resource for you. Just a little housekeeping before we get going. At Advanta, we don't give any tax, legal, or investment advice. We also don't endorse any particular products. Just know that all of the information that's going to be presented today is just educational purposes. So we always encourage you to do your own due diligence, consult with your professional team, whether it's your attorney, your CPA, or your financial advisors before making any investment decisions. Three quick takeaways. Just know that any IRA or former employer plan qualifies to be self-directed. You choose the investment that works best for you. So in this case, we're going to be talking about private lending, asset-based lending. And then, of course, knowing that all of the income that's going to be generated flows back into the IRA. If there's any expenses associated with it, it'll be paid out of the IRA account. Just a little history about Advanta and who we are. We've been in the business for nearly 20 years as one of the leading self-directed IRA administrators. Our headquarters is located in Largo, Florida, which is the general Tampa Bay area. Advanta also has an office in Atlanta, but we do work with clients nationwide as we have over $2 billion under our administration now. In terms of how we differentiate ourselves from our competitors, Advanta, we provide you, our clients, concierge style service. This is where you have a dedicated account manager or direct point of contact that's going to be with you for the life of your account with us. And then also too, our educational platform is pretty robust. We have experts and guest speakers like Mr. Berson that's going to knowledge share with you. In addition to hosting weekly webinars, we also provide you with the opportunity to participate in our virtual networking, Pitch, Promote, Prosper. It's every other Friday. Definitely check out our website if you want to register to attend. And then, of course, any webinar that we do host, it is recorded. You can find it on our YouTube channel, but also too on our video library on advantaira.com. So exactly what is a self-directed IRA? A self-directed IRA just very simply means that you as the account owner have complete control over your retirement funds. You have complete control over the investment decisions, but also too, it gives you the opportunity to really diversify as you build retirement wealth. You can use IRA funds or retirement funds to invest in a universal list of things like real estate, whether it's a single family or a multifamily unit. You can certainly do private lending, and that's what we're going to focus on today. That's based on or backed by our real estate related assets. But you can use retirement funds to invest in tax liens, notes and mortgages, precious metals. It's near limitless in terms of the opportunities available to you as a self-directed account holder. So why do people choose to self-direct? There's many different reasons. I'm just going to touch on three of them. One, it can be a new source of capital for you. If you have an old 401k that's just sitting idle, you can elect to do a direct rollover of those funds to move, to make that investment without having to tap into your personal savings or take out a bank loan. Another reason as to why you may look to self-direct is because of the ups and downs, the volatility in the stock market. One day it's up, the next day it's down. It can be a global event that can, cause greater volatility. Whereas with self-directing, if you're diversifying your account into assets like, lending or, real estate that's tangible, you can always retain some value. And then, of course, the tax benefits, having those rents, those profits, those dividends flow back into that retirement account, tax-free or tax-deferred, depending on the type of account that you have. In terms of the different types of accounts that can be self-directed, you're already familiar with those. As for individuals, you can look to self-direct a traditional or Roth IRA. With traditional, it's tax deferred, meaning you get a tax break up front. And then, of course, at retirement, that's when you pay taxes. Whereas with a Roth IRA, you elect to pay the taxes up front, grow that account over time, and then when you take it out at retirement, those distributions is tax free. If you are a self-employed individual or an entrepreneur or business owner, you can look to self-direct a SEP, simple or solo 401k. Individual 401ks has greater flexibility. A lot of real estate investors like it just because of higher contribution limits, but also to some lesser known accounts that can also be self-directed includes educational savings account, HSAs, which is to cover medical related expenses. With the HSA, just keep in mind, you do have to have a high deductible insurance plan, so check with your provider for that. And then, of course, any former employer plan qualifies, whether it's an old 401k, 403b, TSP type plan, they can all be self-directed. The main thing is that the contribution limits vary between the different accounts, and then with a Roth, your distribution would be tax-free at retirement, which is 59.5, as long as you've had that account for at least 5 years. In terms of the contributions for 2022, for a traditional Roth IRA, you can put in $6,000. As long as you've earned income, you can put in $6,000 if you're under the age of 50, $7,000 if you're over 50. If you have a SEP IRA, you can put up to 25% of your earned income, not to exceed $61,000. For a simple IRA, as an employee, you can contribute $14,000, and your employer can match up to 3%. With the solo 401k, again, it's higher contribution limits to where you can possibly put up to $61,000 total if you're under the age of 50, or $67,500 if you're over the age of 50. For an ESA to cover, education related expenses, you can put in $2,000 per year per child. For an HSA, for a single individual, you can put in $3,650. For a family, you can do $7,300. For an HSA, if you're over the age of 55, you can put in an additional $1,000 catch-up. When you're ready to get started with Advanta, we've really streamlined that process for you in 3 simple steps. Step 1, first and foremost, you go through and fill out the appropriate paperwork. You can do it electronically on our website or via DocuSign. We'll be there to guide you through that process. You will have a dedicated account manager. Step 2 is funding the account, and you have a few options. You can use a combination of, doing a direct rollover from that former employer plan, like an old 401k, or transferring from an existing IRA that you have. You can move as much or as little as you need to make that investment. There's no tax liabilities for you to do so, or you can make an annual cash contribution. And then finally, step 3, start investing. What is it that you have an interest in? Do you want to use your IRA funds to where you can passively or actively invest as a lender in that new construction project? And with that, I'll go ahead and turn it over to Gary just so he can do his presentation. So Gary, let me just make you the presenter.
Thank you, Reneika.
My pleasure. There you go.
Come in. Yeah, hopefully everybody can hear me. Good afternoon now. I want to thank Reneika and Advanta for allowing me to host the webinar. I'm thrilled to be able to share information about asset-based lending and tell you a little bit about the Berson Group, which I will, by the way, refer to as TBG. It's a lot more easy to say than to spell it out every time, and everybody knows it says TBG. And I want to tell you about working with Advanta. Most importantly, I want to also explain the benefits of investing through your IRA. Reneika goes through it some, but I think it's good to hear from someone outside the company and someone who has experience doing it. I'm going to spend about 30 to 35 minutes on the presentation, and then I am going to take questions. I don't think it would be beneficial for me to be chatting any longer than that. I would ask that you hold your questions to the end. I think I'll answer a lot of your questions. I'm going to leave 15 to 20 minutes for them. If you feel like you want to ask a question, you can type it to Reneika, and if she feels like it's important to interrupt me, then that would be fine, and we can do that. I'm sure that most of you, well, I say I'm sure some of you are Advanta clients already. I'm hoping that there are actually some folks, because I know I invited some of my clients to come join us. So I'm hoping that there are some non-Advanta clients that at the end of this will look more into, joining as a member of Advanta and considering doing that. Hold on one second. I'm hearing feedback on my end. Lindsay? Sorry, gang. Her computer's in my office and I'm hearing myself talk. Thanks. So without any further ado, let me get into it. My name is Gary Berson, and I am the president and founder of the Berson Group. I am presenting here from beautiful Charleston, South Carolina, which is one of our markets, and I moved here about 7 years ago. It's a wonderful place to live and work and play, so thank you again for the opportunity. I want to tell you a little bit about my team. We have a team of about 5 folks, thinking about adding another. Let me start in Atlanta, where I have my son, Matt, who is our VP of operations. Matt handles our our builder relations, due diligence. He also is raising some money now. He also has his own construction company. So he's very much into real estate and has been with us for 5 years. Mark Weber, also in Atlanta. Mark's been with me since the day I started. He has been instrumental in our growth through the 12 years we've been open. Mark also handles all of our builder relations in Atlanta, our due diligence, which is most important. He lives in Atlanta with his lovely wife and 2 children. And in Charleston, I have Christina Kirk, who's my CFO, been with us 4 years, super smart, MBA, CPA, came from a bigger company here in Charleston, and I convinced her to come work for us, and she's wonderful. And then our last but not least, Lindsay Hillman, who joined us about a year ago, our VP of operations. She's sitting here with me now, help me do all these slides. Lindsay has a paralegal background. She also had her own company managing 300 to 500 properties at any given time. So she's our latest all-star. So what I'm going to go over is I'm going to overview the company a little bit. I'm going to tell you what is asset-based lending, because some of you may know, some of you may not. I'm going to talk to you about our lending process and model so you can understand, and that may prompt some questions from you all. I'm going to give you a couple of actual examples of loans that we did and return on the investment to you if you were to invest with us through your IRA. And then, of course, everyone's interested in protection, risk, and legal, which I think is important, and I'll review that. And then finishing up with our relationship with Advanta, the process to get on board, next steps if you want to talk to me or continue on with Reneika. I'll tell you how you go about that. And then we'll finish with Q&A. So I founded the business in Atlanta. I moved to Atlanta right out of college, and I'm not going to tell you when because it'll age myself, but many years ago. I actually I was in corporate sales for Xerox for 10 years. And then in 2003, I started buying foreclosures. I'm actually on the courthouse steps. In 2003, I did it with a partner. We had another company name. He moved away. And in 2005, I actually formed the Berson Group, TBG, and I started buying foreclosures on my own. I did about 150 of them. And then in 2008, when the downturn hit, it took me a little while to get out unscathed, and I saw a niche to start lending private money in 2010. And that's when I started doing this portion of it. So we just finished our 12th year, and I'll get into more of the specifics on asset-based lending. So we provide timely lending for builders and investors, by the way. Not all of our customers are builders. A lot of people today, as you probably know, get into real estate. I have a lot of borrowers that are real estate agents. One of my best 2 borrowers, one's a restaurateur who fell in love with real estate in Charleston, and he's one of my better ones. I have another one in Charleston that works for Boeing Airlines, and he's an all-star in real estate. So it's just not builders. These guys that borrow from me, they have crews or they go and hire contractors. There's all kinds of people that borrow money. It doesn't have to be builders. like I said, I think it's about 60 or 65% that are actual contractors. And we lend on property acquisition, remodels, and new construction. Established the business in Atlanta. We moved to Charleston, one of my big borrowers in Atlanta, started buying up some property in about 2014. I started doing loans here. In 2015, my wife decided to take a job in Charleston, which we already were in love with. So we packed up, I moved to Charleston, and no regrets. I really have grown the business here. Charleston's about 22% of our business today. Atlanta remains 78%. And we also do a little bit in Richmond, Virginia. We have a couple of builders there that we have relationships with. It's not a huge piece of our business. And we just announced that we are gonna start also doing loans in Savannah, Georgia, which is a hot market. So in 2010, I completed 2 loans. I had 2 loans pay off in the year of 2010. Right now, we have completed over 2,000 loans to date. We have 250 active loans in excess of $80 million. So we have really grown this little family business, a business that is a lot of fun, that has a lot of success. Currently, we have 125 plus lenders. I call them lenders / investors. Some of them are overseas. They're coast to coast. Out of those 125, I have about 15 or so that actually invest through Advanta. And some of those 15 invest personally and through their IRA. So I would like to grow that number. And hopefully after this, some of you will call me and say, I'm ready to do this. So what do? We target 70% loan to value, and we do due diligence on every loan. So we're not taking applications over the internet and write some software that decides whether or not we're going to be a good loan or not. We are on site, and I'll get into the detail on that on additional slides. Our typical loans are 100,000 to 1 million. Our current average loan is 305,000. So our sweet spot are houses that are worth 200 to 600,000, which is great. They move quick. If you have a problem, they're easier to get rid of or to rent if necessary. I'll talk about what happens when you do have a problem later. Have I done bigger loans? Yes. Depends on, I've done loans as big as $1.75 million, I believe, but it is not our forte, and it better be a darn good builder and someone we have history with, but it is not our typical loan. What's most important is we advance money as work is completed. It's critical in asset-based lending that you don't give all the money away. You give builders money on draws. As they complete work, they get money. And you'll see as I get further along the presentation, that's important because if someone does go into default, if we do our job, we have the money sitting in our escrow account to complete the work. And that's how it's worked out on the few foreclosures that we have had. Generally, loan terms are 1 year. We charge a 2% loan fee at closing. We charge 10% interest, charge monthly in arrears. And we pay, this is good news for y'all, we pay the lenders on the first of every month without fail. If the first falls on a weekend, we pay you the Friday before. So we basically are paying before we ever collect. Everybody knows not everybody pays on the first. So we actually send Advanta IRA money directly to Advanta IRA. As you'll learn, your loans will be in the name of Advanta IRA for the benefit of Jane Doe, IRA number 12345, care of the Berson Group. And we send them your payment via ACH every month. We send a batch of everybody's. They, of course, report to you as well, and we report to you as well on a monthly and annual basis. I'll tell you more about that later. I can say that over the 12 years, all of our lenders, whether it be IRA or non-IRA lenders, have averaged a 10% annualized return. And that really depends on the length of the loan and the term. So the longer the loan, the shorter the yield, the shorter the loan, the higher the yield because of that loan fee that you're getting. So I can tell you now that of the 2% loan fee, I split that with the borrower. You get 1%, I get 1%. And then on the 10% interest, you get 8.25%, and I get 1.75%. I'll get more into that when I show you examples. That's a quick overview of the history of TBG and what it is we do. So what is asset-based lending? By definition, it is a loan secured by the asset. You might have heard terms like hard money lenders. I don't like that term. I think it's kind of a dirty term for the business. I like asset-based lending. That's what I refer to it as. It's probably been around forever. I haven't really never researched the history of it, but I can tell you that in 2008, that downturn had a major effect on private lending. So all of you, I'm sure, went through it, 2006 through probably 2009, when we had the downturn. All the big boys, the banks, the SunTrusts, BOAs, Wells Fargo, Chase, they all stopped lending. They were now in the real estate business, which banks are not good at. They want to be in the lending business. So they took back all this property. They basically stopped lending to any builder out there, and they started trying to get rid of all these assets that they had to control. So in 2008, that downturn really had a very positive effect on asset-based lending because there's a lot of good builders out there, especially in Atlanta. Atlanta has been a growing city, still is. There was a need still for housing, even in a downturn, and there were a lot of good builders that needed money and couldn't get it. So thus, asset-based lending really took hold right after the downturn, and I saw that niche and I jumped on it. TBG is a private commercial lender. We are not a mortgage broker. I do not have a mortgage license. Thus, my loan docs all clearly state and have an affidavit that whoever borrows money from me cannot occupy the house. Now, can they put in, their mother or a cousin or somebody like that? Yes, but they cannot physically occupy the house. That would make me a mortgage broker, and it's against all rules that are out there. And I'm strict on that. Why do borrowers use private lending? It's the number one, because now we're 12 years after the downturn. There are some, the big boys are still not lending, maybe to the Lennars and Ryan Homes of the world, but they are not lending. Most of my borrowers are doing 1 to 25 houses a year. And the big banks are just not doing that kind of lending. Are some of the community banks doing it? Yes. So why are people paying double the fees? Because community banks are probably charging 1 in 5, where I'm charging 2 in 10. The number one reason is the hardest thing right now is to obtain property. In order to obtain property, your contracts have to put all cash, close in 3 weeks, no contingencies, no special steps. If it doesn't have that verbiage, you're going to go in the out pile in all likelihood. If you put a contract in, you're going to go, yeah, if it doesn't have those things. If you have a banking contingency in your contract, in all likelihood, you are not going to go in the in pile because the sellers know that you are contingent upon a bank approving you that could take 30, 60, sometimes even 90 days. So thus, private lenders have found a niche where these builders have come to use us. The second reason they use us is the relationships that we've built. There are other private lenders out there. Some of them are big, some of them are regional, some of them are national. They're doing it strictly on the numbers. They're not really looking out for the borrower. I say that, I'm sure there are some that do, but we really treat our borrowers like partners. I have borrowers still that started with me 12 years ago. We look at every deal. If we think a deal is tight for them to make money, we do decline deals. They usually come back and thank us for it. When they get into some trouble, we're there to help them out. We are their partners. And the biggest reason we are is number one, it's good business. And number two, if they're making money, they're coming back and using us. If they're not making money, then we lose them through natural attrition. And the last reason they use us or use private lending is that the banks are a hassle. They're a hassle to do business with. I'm sure all of you at some point have gone through some type of a refinance or a new loan. I did one a couple of years ago on just refinancing my personal house. Like to think I have great credit scores and a lot of equity in my house. It took me 90 days, and I had to produce document after document. In some regards, I think that's really good because we're not going to have what happened in 2008 when there was no really checks and balances. They were just giving away money. But in other respects, for people who want to invest in construction, they need to be able to close quick. So those are the three main reasons why borrowers use private lending. Loans are typically short term. I don't do any loans longer than a year. So these are short-term loans. Sometimes they go past the year. I'd say 10 to 15% of them do, either because permitting took too long, the builder may have mismanaged his business, he may have taken too long to build, or he might have had trouble selling it. So if they do go past maturity, we give them plenty of notice, and we do charge additional loan extension fees to keep the lender yield up. So that's probably a question somebody had. And on average, our loans in 2020, we're doing our 2021 stats now, our loans in 2020 averaged 9.6 months, which is great. I think in 2021, that will come up some because we're doing more new construction, and COVID really did have an effect on timeframes with supply chain issues, labor, permitting. It did take longer to build. So I do expect probably a month longer in 2021 than in 2020. We do three types of loans. Now you will see asset-based lenders out there that do commercial buildings. They do, they'll do retail, they'll do strip malls. We have, for the most part, we have stayed away from that. I've done a few commercial buildings. They typically last too long. We have pretty much stuck to new construction. And a lot of times new construction today means they got to buy a house and they tip it over and build new. On this 128 Clifton, which I'll show you later on, that was the case. We do what's called purchase and rehabs, where a borrower will come in, they'll buy a house, and they'll rehab the house and resell it. And we do some land lending. Land's a little bit more risky. I don't do a lot of it. I probably have 3 or 4 million in land loans today. They typically last longer. If a developer tells you that it's going to be a year, you can count on it being 2 years. We do charge more because there is more risk. I usually charge 3 points and 12% interest. So the lender yield does go up. But in the case of a downturn, excuse me, if we were to have a problem and a developer develops 35 lots, that's the last deal I did. Those lots were on paper were worth 50,000 a piece, and we have a downturn like we did in 08, they could be worth 5,000 a piece. So there is some risk, as opposed to if you had a house and we had a downturn, we have an asset rather than a piece of dirt. And I'm happy to get more into that aspect of it if you're interested. So the TBG lending process and model. I'm going to go through 6 major portions of the process: the loan request, the deal itself, running title, the actual closing, the build itself, and then our reporting. So a qualified borrower, and it's important, we don't take on a lot of new borrowers. I have over 100 builders. I may have mentioned that. If I repeated myself, I apologize. There's a lot of borrowers that want to use us. So it's important for us to actually engage new borrowers. We get 3 months of bank statements. We want to see what they're either building now or what they've completed. We want to meet them, shake their hands, see what kind of a person they are before we'll let them actually borrow from us. And it's important that we go through that because we are very conservative. I've had 4 foreclosures and 2,000 loans in 12 years. I think that you'll find that that's a very low default rate, and it's because of how we handle our borrowers, especially new ones. And it's important to know that because of our engagement with borrowers, we have the same repeat borrowers, which is important in keeping down your defaults. So a borrower brings us a deal, and they know to send us the contract, pictures, the budget, a CMA, which is what it's worth, and then we'll do some information gathering. Me, Matt, and Mark, who actually I do the due diligence here in Charleston, we'll look at it on paper, and if it's something we want to pursue, then we go to the due diligence process, which we actually meet everybody on site. We want to look at the street, the schools, the properties on the street. Is there remodels going on? Are there new construction going on? We want to get a feel for where this house is. And then, of course, we are lending 70% of the ARV, which is the after rehab value, or ACV, which is the actual after construction value. We use that model. So our due diligence makes sure that there's 30% profit built into every deal. So for example, if I had a deal where the house, we did our due diligence and we thought it was worth $450,000, we would lend up to $315,000, which is 70% of that value. So furthering on that example, let's say that a builder came to me, he wants to buy a house for $250,000 on this same deal, and he needs to rehab it for 65. Well, there's the $315,000 that we have available for him. If his remodel was $75,000, then we would make him bring an extra $10,000 to closing so that we stayed within that 70% guideline. Now, do we go over 70% on occasion? Again, it depends on the builder. We might go to 71, 72, 73. I'm even going to show you one in one of my examples that we ended up at 75%. But we try to stick to that 75%, 70%, because if we have a problem, we want to have equity in the property. Once we approve the deal, we order title. We order formal title with our two great attorneys. Title needs to come back clear, and when it does, then we issue a commitment letter, which basically is to outline to the attorney and to the builder what their terms are. They use that to put together the loan docs, and then in the case of Advanta clients, those loan docs and title commitment letter actually go to a dedicated manager who would approve those docs. And then once they're approved, they would send them to you, the client, to sign off on DocuSign that you approve and that you want to move forward with the deal. Now, of course, during the course of all this, I would bring it to you and tell you about the deal and get your approval that you do want us to pursue it. Some of the Advanta clients don't really care about being that hands-on, but some of you do, and I'm glad to do it. It really is driven by you. And then we go to closing. We have a formal closing. We have two great attorneys, one in Atlanta, one in Charleston. I lean on them heavily because they're great on checking title and getting deals completed. It's so important to have good attorneys, and I have my one in Atlanta I've had for 12 years, and the one here in Charleston I've had here for 5 years after going through a couple. And then we have the actual loan closing. We get all the loan docs. We send all the docs to Advanta, your representative with Advanta, and of course we send them to you. We keep everything on file, but we send everything to you so that you can keep them on file as well. And then we get into the build. So we've done the close. We got this money sitting in our escrow, and then as the builder completes work, they request draws. We go on site. We inspect. So using that same example where it was a $65,000 rehab, he goes in, he demos the house, he puts on a new roof, he makes a formal draw request via email. We have a process. Matt or Mark would go out, snap a few pictures, make sure the work was done. Then they would let Lindsay know to send them a draw, and that process continues until the house is completed. Our draw process is great. The builders love it because we are very fast. We typically get them money within 24 to 48 hours of their request. I've heard of stories of other companies taking up to 2 weeks. And this is another reason why they love us, because they're paying really good money for our money. So we want to get them their money quick. They finish the house, they market it, they sell it. We send a payoff letter to the closing attorney. They pay it off. They send us back all the money. We send you a final spread, which shows you how much money you made. We send it to Advanta as well. And then as soon as we receive funding, usually the same day or the next day, we send that money, your principal amount, to Advanta, which is required by law. We have to return all the principal after every deal closes. And then we would I would already be looking for something new for you because we don't want that money sitting. And then we would go through the same process again. Hopefully very soon I'll have a deal already in works. And then we would just do the same process where we have something ready. We send the Advanta rep all the loan docs, and it starts all over again. Now your interest, we do accrue on a monthly basis, and we would send that again on the first. So let's say your loan paid off in the middle of the month. We have 15 days of interest, and we would send that as usual on on March 1st if it happened in February. We do send you an initial spreadsheet which shows your IRA name on there, the amount that you have in. You might be with somebody else. Their information would be on there too. What your interest and loan fee was, what the check is that we sent, which we do immediately upon closing. And then every month, I also write you myself, and we send you a monthly statement because you could have multiple loans. It may not just be one. It'll show all of your loans, how much principal you have in there, how much interest you made that month, and what the payment amount was that we sent to Advanta. We do a big annual report, which we really work hard on. It has all our statistics, and we go through the market conditions. I usually put some other items in there. Like last year, I did the importance of having a will and estate plan. This year, I'm actually going to write about investing through your IRA, which I think will be a good follow-up to this. We also do a quick mid-year report, just basically statistical. And then, of course, we do send out 1099s to most of our clients. You being an IRA account, if you did it through your IRA, we are not required to send you a 1099, but we do send you an annualized statement, which shows how all your loans did for the entire year. So let me go through a couple of examples, and I'm going to try to rush through these here. So this was actually a loan we did. This was a purchase and renovation. You can see on the left, this was one in Atlanta. That's what it looked like when they bought it. Looks like they popped the top off, and on the right was the completed version. This is some of the inside after renovation. You can see this is a really good builder of ours. They do a great job. Most of the builders do stage the house. We find that they sell better, although they're selling right now like within a day or two. But you can see that this builder does a heck of a job, not only in their quality of work, but in their staging. So what were the numbers? This again was a 2 and 10 loan. The lender got 8.25% monthly interest and a 1% upfront loan fee. The loan amount was $485,000. That included paying for the house and the rehab. I believe that they did go over a little on budget on this one. And the outcome was it took 8.2 months, and that's from soup to nuts. That's from buying it to selling it, paying it off. The sale price was $645,000. So you can see if you take 485 divided by 645, it was a 75% LTV. And I thought about taking the slide out, but I wanted to be upfront with everybody. And some of them they do slip up a little bit. And again, on this one, I think it's because they went over budget. And you can see why. They maybe spent a little too much money. And but the 75% LTV is very comfortable. You get 25% equity built into it. The lender received $33,000 plus over the 8.2 months, and it was a 10 plus annualized return. The next one is this is a new construction in Atlanta. This is one, actually, I got to brag. This is my son Matt, who actually bought a house. And they tipped it over, which is how you have to get a lot of houses. This is an in-town neighborhood called Kirkwood in Atlanta. So he tipped the house over. He built one new from scratch. Again, he paid full fare, guys. It was a 2 and 10. The lender got 8.25% and 1% loan fee. The loan amount was $570,000, and the loan took almost a year, which is not atypical, because it took a while to get permits and to build it. And this one sold. It sold, I believe, within 6 hours of it being on the market. They had They had eight offers, and he sold it for $875, and this was a 65% LTV. So this was at the other end of the spectrum where there was 35% equity in the project. And that was mainly because I guarantee you when we did the loan, it was right at about 70, but they sold it for so much more than they thought it was worth to begin with that the LTV came down. The lender got 52,000 plus, and this was a 9.42% annualized return. So I wanted to show you one that didn't quite hit 10, and that was basically because of the longevity of it. It went a year. If it had gone 8 months, it would have been more in the 10% range. So let's talk about protection, risk, and legal. So protection, every loan is in the first lien position. That's important. You will see on the HUD, on the loan docs, it would be an Advanta IRA for the benefit of Jane Doe, IRA number 12345, care of the Berson Group. You will see that on the commitment letter. You'll see that on the loan docs. You'll see that in the title. You'll see that on everything. You are basically the bank. We require builder's risk insurance on every loan. Builder's risk has got to be a minimum of the loan amount. Of course, we talked about the draw and inspection process. That is big protection. A CMA and verifying value. A CMA is a competitive market analysis where we get actual data on what is sold within a half-mile radius. If we're not comfortable with what we think the CMA is telling us, we do about 25% of the time order formal appraisals where we hire our own appraiser. We tell them to give us a real appraisal, and then we know exactly what the property is worth. And that's how we determine our 70% loan amount. And then your loan being in the IRA, that's critical for your protection. Advanta is tremendous in looking out for you, making sure that the loan docs are proper, reporting to you, getting you involved where you need to be. So that's an extra layer of protection. Risk, if I tell you that there's no risk, I would run as fast as you can. There's always risk in any investment that you do, especially in real estate. The number one risk would be if a borrower defaults. Borrower could default by something as simple as mismanaging his business. I've had 3 that defaulted because of that. It could be that they got ran over by a truck, unfortunately, and got killed, had no succession plan, and the business has no way of continuing on. There are several reasons why a borrower can default. There could be market changes. Like I said, I don't think we're going to have anything that happened in 2008, but I actually think that we need a market change right now. I think prices are getting too high too fast, and with interest rates ticking up, I think we're going to start losing some buyers because they're just not going to be able to afford it. For the last couple of years, I think prices going up has been great because the builders have taken on some extra expenses with time, labor, materials going up. There's all kinds of reasons why they needed a little extra profit, so it was good. But in the long run, they need buyers. And if we lose buyers, then you'll see the market slow down. I wish I had a crystal ball for y'all. I feel very good about 2022 in my markets. I feel good about 2023. Now we have a war, I guess, in the making. But I don't think that changes the risk of the supply and demand that is out there. It's incredible. So I think our risks are low, but we're very aware of them and we're diligent with them. Legal. So what happens if you have a default process? I'll never call you and tell you, number one, that you've lost all your money. I might call you and tell you that your borrower defaulted, and we're going to handle it from there. I'm not going to hand you a set of keys. I take it all the way through the default process. Remember, I bought 150 foreclosures. I had 25 rental properties. We're going to mutually decide what you want to do. It may be that you want to sell the house right away after we finish it. And remember, we're going to have that money in there to finish it. And remember, I got 100 plus builders that will help me finish it. It may be that we're in a downturn and you want to hold on to it and cash flow it, have it rent for a couple of years until the market comes back. I got Lindsay, who's managed 300 to 500 properties at any one given time. I had 25 rentals. We know what we're doing. We handle all that for you. So we're there for you every step of the way. Of course, you have title insurance in case we require that on every loan. So if there is a title issue, I'm looking at my clock, sorry. If there is a title issue, you are covered by title insurance. We've never had to tap into it except on one default in Charleston, and the title company did kick in money to make us whole. And then of course you have our support, which I just went through. Why Advanta? Advanta is, there's only certain companies, for those of you who are not doing this, there's only certain companies in the country that have the licensure that Advanta has. You have to have a certain licensure to be able to invest people's money in the numerous things that Reneika took you through, including asset-based lending. I actually worked with another company when I first started and found Advanta, and I just find them to be just so wonderful to work with. We have a dedicated manager, Courtney Maxim. I hope it's okay that I shout her name out there. She's just wonderful. She handles all of the TBG clients. Can't say enough good things about her. They're very active in their oversight and management. There are a few things that you have to sign off on. You have to do annually. I help you do them. Of course, you have to sign up, which Reneika can help you with. I can help you with. And once you sign up and you move your funds into the account, then it's gravy. It's just easy. I've had clients with Advanta since 2013. They're continuing to come in. Not one of them have left. They love it. They're consistently growing their wealth. I think it's a wonderful way to use it. My wife, Rebecca, has what they call a checkbook IRA with Advanta. Unfortunately, she can't invest it in my company because of IRS regulations, but I am the manager of that checkbook IRA, and I help her find other deals to put it in, and she loves it, and watching her account grow. It's very easy to do, and then, of course, we encourage you can always reinvest your earnings. Most of my clients say, okay, Gary, you sent me back $250 in principal, and I got $50,000 in interest sitting there. Let's do a $300,000 loan. And that's a great way to compound your interest into new loans. Almost done, guys. Why TBG? We got 12 years of year-over-year growth. We have a 0.2 default rate. It's great passive monthly income for you. You don't really have to do anything. You get paid monthly. We're in two fantastic, strong markets in Atlanta and Charleston, and moving into Savannah. We live and work in our marketplace. We're a family office. We're a dedicated family office. We love where we live. We know our areas where we're lending. We know our borrowers. I'm on first name relationship with all of my lenders. Most of the time I know their family and kids. And that's what makes us, I think, a little more special than somebody that's a $200-300 million lending company. All right, next steps. You can always, my name and number and email and website are below. You can always call me anytime. You can reach out to me if you need more one-on-one time. If you need Reneika to help you with any of her questions related to Advanta, I know she's already given you ways to get in touch with her. I apologize that I went a little over. I think we got 12 minutes for Q&A, so let's jump in.
Thank you, Gary. Great presentation. Just a wealth of knowledge, great information. I do have questions that came in. The first question is there a minimum investment requirement for IRA investors or any of your investors?
Typically I tell people I like a minimum of 200,000. I do make exceptions. The biggest reason I put that minimum audience is I like this first name basis. If I just let everyone come in for 25, 50, 75,000, then I have too many investors and I don't know everybody personally, and it becomes more of a burden, if you will, to manage, if I got up to 200-300 clients at a time. So I don't want to scare you off. If you got 100 or more and you want to start with that, I'm happy to talk to you.
Okay, next question is, what is builder's risk insurance for?
So builder's risk insurance is basically protecting your asset. Just think of it as home insurance. So during the build, if the house burns down, and I have had one build down, I've had one in 12 years, and we got 100% of our money from it. It basically is your insurance on on anything, on natural disaster, on a burn, on a theft. It's the insurance on the property for the builder.
Okay. Next question is, do you raise per project or is it continuous? I think you mentioned that someone can reinvest or compound back into, but they want to know, do you raise per project?
I do not. I do not
Okay.
raise per project. So I actually match up per project. So the Berson Group is not a fund. We don't have a pile of money that we dole out and everyone has equal participation. I actually match up investors to a particular loan. And we constantly have loans coming in. I probably have 70 loans in what we call our prospect spread that have not closed yet. Now, some of them are getting ready to close and are already funded, but I probably have half of those that are not funded, but they may not be till March or even April. So I do match you up. And depending on how much money you have or your appetite, I would say half of the loans I put people together and you'll both be in first position. So it might be another person in an Advanta IRA. It might be me. By the way, I invest a lot in my own business. It could be someone you don't know. Now, if you're adamant against that, it's worked out fine through the years, but if you're a person that says, no, I don't want to be with anybody else, I want to be on my own, it might be a little harder to find you a loan, but I will find it. It might be that you're only with me, and everybody loves doing loans with me because if I'm in on one, they feel a little more comfortable. It may be with one of my employees, as several of them do loans as well. I can talk more in depth with that, but we do match you up. So we won't grab the money from the IRA until we know. Actually, I don't even tell them to send me the money until the day before your loan's getting ready to go. We don't need it until then.
Okay, and that was a question too. Do you invest in your own deals with passive investors? I have several more questions, but someone did ask if you invested in your own deals.
I did.
Like, okay, perfect.
I do. I typically have between $1.5 million and $2 million of my own money in deals.
Okay.
And I believe in the stock market. I'm diversified. A lot of people are moving they're scared right now because the stock market's bad. And, they're scared and they're pulling money out and giving it to me. So it's good, but I believe in the market in the long haul. So I'm diversified, but I love doing the Berson Group loans because my yield is higher than y'all's.
Absolutely, in terms of diversification and using stock market and also real estate based asset. So next question is, do you ever get key man insurance for builder?
No, I do not. Remember that we are a bank, so we have no ownership in the property. Now that builder, when we give them the loan, that builder's buying the property. They own it. We're the bank, so there's no reason to have. Our whole protection is the asset. So if he passes away and is unable to sustain the loan or pay us off, then we will foreclose. And your equity, if I do my job, that 30% equity now becomes yours.
Okay, so I have a couple more questions. Yeah, first comment is, yes, the presentation will be available. We'll send it out to you. Also, too, this recording will be uploaded onto our YouTube channel. Next question is, does your investing personality change based upon market condition?
I'm sorry, ask that again, Reneika, I didn't hear you.
It says, does your investing personality change based upon market condition? Like right now, the climate is changing.
Well, that's an excellent question. Yes, let me give you a great example. When COVID hit hard in 2020, we were flying high and I got really nervous. I didn't know what was going to happen. People weren't going to work and I wanted to see what was going to happen. And I put the brakes on. We typically do on average 20 new loans a month. And so I believe it was April of 2020, and you'll probably see it in our annual report. I put the brakes on. I took no more new loans. I think we did 3 loans that month because I had commitments that I had to honor. And we did 3 new loans. I wanted to see what was going to happen. I wanted to see what was going to happen with the marketplace. I wanted to see if borrowers were going to stop paying, that they were going to start calling me and say, hey, COVID has affected my ability to pay you. I wanted to see what was going to happen. So that was a market condition. Knock on wood, everything was fine. I had no problems. The next month we kicked back in. But yes, of course, I always keep an eye on payoffs. So yeah, we're doing a lot of loans, and every month this month we did 30 new loans. But yours truly, I keep an eye on the payoffs, because when the payoffs start shrinking, that's when I know we have a market problem. And luckily, I have two great attorneys that are doing hundreds of closings that also get a very good feel for when the market's slowing down. And they pick up the phone and say, Gary, I can feel it. Closings are slowing down. I can feel the market changing. So I have a lot of indicators. So yes, I will definitely, my lending practices will change as the market changes.
Okay, question is, out of the 4 default, what is the investors end to lose, I guess, that's the question. Out of the 4 default, what is the investors end to lose?
What do they end to lose? What could they lose?
Yeah, yes.
Let me just tell you, on the 4 defaults that I had, the first 3 were in Atlanta. I actually was the lender on the very first one we had, along with one of my buddies. And we actually made more money. We each made 20,000 more. The other few, I think, was a lot that we flipped. There was no, the return was still around 10%. Another one, we took the property back, and the lender actually wanted, it was just a rehab that we had not funded the rehab portion yet. And I gave the lender the option of whether to sell it as is, and I thought she could get out clean. But she voted to put in the rehab money, and it was extensive. I think it was $250,000. And we rehabbed it with one of my other great builders. And I believe that she ended up making an extra $40,000 above and beyond her normal interest and loan fees. So it turned out great. The fourth one was my nightmare. It was in Charleston. I had a crook as a lender. I ended up in 4th position because I had a bad attorney at the time. It took me 2 years to solve it. I got all of the money back. I got all of the attorney fees back, which was $95,000. And if my memory serves me right, the return on that loan was 3%. But that's after all the principal was returned. I'll never forget it. It was $400,000 principal on a $605,000 loan. I thought the lender would run as fast as he could. He today has $2.5 million with me because of the way I handled that foreclosure situation. So my answer to that question is, it would be highly unlikely that you're going to lose any money.
Okay, so next question, I have a couple more. Where do the funds for your monthly payments to investors come from? Retained earnings?
Yes, well, remember, we are collecting interest all along, and I have an operating account. So I have an active operating account, which is my money, the Berson Group's money, and then we have a dedicated escrow account, which is where we take all of the new money that comes in, all of the interest payments that come in, really anything for the business. And that's where we pay all of the interest out of. So if there's any shortage every month on what we've collected and what we paid out, it comes out of my operating account.
Okay, so what is your process for finding profitable investment properties? I know you mentioned due diligence, but they want to know, what is your process for finding, or how do you decide on what's a profitable investment?
It's important to know that I am not looking for property. Property is being brought to us. I am strictly a lender. My hunting property days are over. But I can tell you that that's the hardest thing right now, is to find property. That's the biggest complaint I hear. I just did a round table with some of my builders in Charleston, some of my best builders, borrowers, and we talked about that and how do we find property. So it's hard. I mean, you got to go out there hunting. You got to get on FMLS. You got to go knocking on doors. You got to do mail outs. You use what they call wholesalers that send out blasts. Back when the you know what hit the fan, this was the biggest problem. Lots stopped being developed. So here we are 12 years later, and there's a shortage of lots, and it's the hardest thing to do right now is to find property.
Okay, so another question is, how do you do due diligence for CA properties? Do you have a team in California? I think you mentioned that you only invest in Georgia and Carolina, and Virginia was asking about California.
Yeah, I don't do California. Every state has different laws, and it's really prohibited me from like going to Florida or North Carolina. They're very borrower-friendly states, where Georgia is very lender-friendly. Charleston actually is not a tremendously borrower-friendly state, but I've got Charleston really wired, and yours truly is here. But I do not lend in the markets that we are not physically in.
Okay, and last final question before we close it out is, what's next if I want to invest?
If you want to invest, I would, number one, I'd probably reach out to me and get to know each other a little bit better. And then if you're not a current Advanta IRA client, I would also reach out to Reneika, and she can take you that process. But you may want to start with me, and let's spend a little time together. I can answer any particular questions you have, and I can tell you exactly what you need to do to get signed up and figure out how much you want to invest, and tell you about some loans that we might have that would interest you.
Wonderful. Thank you, Gary. That's all of the question. Great presentation, great information, great question. Thank you so much, audience. Again, if you have any questions relating to self-directed, definitely feel free to reach out to me. Visit our website at Advanta IRA. If you want to learn more about TBG, the Berson Group, definitely feel free to get in contact with Gary and his team. With that, I'm going to go ahead and end the webinar, and hope everyone have a great rest of your day.
Thank you, everybody.